Welcome to State Reserves Training. I'm Susie Lindsay with the Legislative Fiscal Division. I'm here to talk about what state reserves we have, how they're used, and we'll get started. The primary state reserve fund is the general fund balance. So what is the general fund balance and why is it important and how is it used? The general fund balance is generated from general fund, and general fund comes from a collection of state taxes, general state taxes, the largest source being the individual income tax. General fund may be used for any lawful purpose, and it's primarily used to fund education, public education, corrections, public health, and human services. And when we talk about the general fund balance, what we mean is after all of the designations, the revenues come in and the disbursements are made to fund, for example, education and corrections and public health, there is usually a balance, and you want to have a balance remaining. And that unassigned general fund balance is what we refer to as the general fund balance, and it's a state financial tool. And it cushions the state from economic volatility. It acts as the state's checkbook, basically. And bond rating agencies look at that to check for state stability. When they're rating a state on whether or not we're an A or a B, they look at the general fund balance to see how stable the state is. Other organizations, like the Pew Charitable Trust, they monitor and check the state health based on what the general fund balance is. So, for example, Pew Charitable Trust published a report not long ago, and they compared us to other states. And as you can see from this chart, they looked at our general fund balance and they said, well, Montana is in this blue range. It's not way up at the highest, but it's also not down here in the orange. And they, now their data is a little bit lagged from what ours is. The general fund balance changes, and the anticipated general fund balance changes often. And so Pew would not have the most recent data, but you can see that, we're still above the 50 state median. We're at 109% that lives within their means, and 103.6 is the 50 state median. This is an example of general fund balance, and at different points in times. The one on the left is what the LFD produces and produced in September to report on what the fiscal year ended for 2024. So at the time, the fiscal year 2024 ending fund balance was just a little bit over $1 billion. So the balance sheet on this side of the screen is the proposal of the executive. The governor's budget proposal has a general fund balance proposal with it, and you can see that they also have for fiscal year 2024 this just short of $1 billion. But then they are proposing that they're going to spend a little bit of that in 2025, 26, and 27. They're going to spend, and they're going to also change some policy. They're proposing policy changes to revenue that would decrease revenue collections. And so between the policy changes that they propose for revenues and the proposals to spend more money, they are proposing that the general fund balance be 555 million. Now, that's the general fund. The other fund that is used for stabilization and reserves is the Budget Stabilization Reserve Fund. This fund was implemented in 2017 by the legislature and signed into law by the governor. And it is developed, it was implemented and developed as a reserve fund. No other purpose but for reserves. So there were rules established for when money would enter the fund and when it would exit the fund. And now, right after the 2017 session, the state had to have a special session because the general fund balance had dipped to 47 million, which was below the statutorily required minimum. The minimum at that time was just a little over 100 million. So it had dipped down below that. And so the governor called the legislature back. The Budget Stabilization Reserve Fund at that time did not have any funding in it. But in 2019, the first bucket of money was able to flow into the fund. And that has continued in fiscal years 2021 through 2024. Money has continued to transfer into that fund. And in both the 2021 and the 2023 sessions, the rules were adjusted. So now, after the 2023 session, for every $3 that's used out of the reserve fund by the governor must reduce agency budgets by at least $1. So again, Pew is an organization that looks at the reserves in total. So they look at the general fund balance and they look at your other budget stabilization reserve, or some states call them rainy day funds. And they say, okay, well, if you only use the reserve fund and you only wanted to use that fund, how long would you be able to run your state government if you just had our budget stabilization reserve fund? So they have this tool here with this circle, and it says that we would have only 37 days worth that we would be able to spend. Now, again, Pew's data is lagged, and so they didn't have quite the same numbers as us at the time. But now they say, well, if you take the general fund balance and you take the budget stabilization reserve, your total balances were 28% of spending. So you'd have 102 days that you could operate before you'd have to, do something, to return those balances. Again, Pew is lagged behind our data. We are constantly updating our general fund balance. During the interim, our office quarterly updates the Legislative Finance Committee on where they think the general fund balance will be at the end of the biennium. And we always talk in terms of the end of the biennium for that. And we also update them on the Budget Stabilization Reserve if more funds have been added to it. In September, our office presented a reserve balances. At that time, we were predicting that fiscal year 2025, the current year that we are currently in, would end at 929 million for a general fund balance. Now, that is not with any of the governor's proposals that they put out. This was basically a moment in time. So in September, the general fund balance for fiscal year 2025 was projected to be 929, and the budget stabilization reserve had 522 million in it. The Budget Stabilization Reserve Fund, every August, the state accountants review how much was returned to the state for general funds from the agencies that they didn't spend. If they didn't spend a certain amount, then a portion of that would be transferred to the Budget Stabilization Reserve Fund. If the Budget Stabilization Reserve Fund was capped, meaning that if it had reached its level that the statute dictates that it's full, then money would flow into another fund called the Capital Development Fund. And that is what happened in August of this year. Because the Budget Stabilization Reserve Fund was at its capacity per statute, money did flow into another fund, the Capital Development Fund. But as you can see, even with these estimates from September, the reserve balances were around $1.5 billion. So those are healthy, and the state is better for these. By having a Budget Stabilization Reserve Fund, it mitigates the risk and the need for the legislature to have special sessions. If you have a strong stabilization fund, you can often avoid having to have a special session. There are other funds that could be used as reserve funds. Now, we know that the Wildfire Suppression Fund has been used to cover wildfires, and in the past, this fund is developed for use for wildfire suppression. However, if in times of economic uncertainty and the legislature were called back for a special session, they could choose to appropriate funding out of, say, the Wildfire Suppression Fund, or the Debt and Liability Free Fund, or the Capital Development Fund, or other funds. I would like to talk a little bit about the Capital Development Fund. It operates just a little bit differently. We call it a working rainy day fund, and what we mean by that is each year, the state accountant reviews how much revenue comes in, and then they propose annual transfers of equal to a percentage of that, the general fund revenues. Now, if there is a time of uncertainty and the economics are such that we think the state may face a recession, those automatic transfers can be shut off. And so the money that would be normally transferred to that fund would just not happen, and the general fund would retain it. And that was set up as a way of, providing for ongoing maintenance for state buildings, but also as a valve mechanism to say, well, if we can't pay our bills, we need to shut that valve off and keep that money back so that we can provide it for other things. And so that Capital Development Fund is a little unique, and it has a setup that's a little unique. So it is, considered one of those funds that you could use if you needed to for reserves. If you have questions, again, Susie Lindsay, and I'm down in the Legislative Fiscal Division. You can email me, or I'm in room 117.